This exercise is designed to help you understand the difference between accrual basis accounting and a cash basis accounting. So it looks like it says on October the 1st, 2007, a company paid a $21,600 premium on a 36-month insurance policy for coverage beginning on that date. Now that was October the 1st. So let's see. We have this grid set up here, and it looks like we've got balance sheet, prepaid asset listing using either accrual basis or cash basis, and then we have insurance expense using either accrual basis or cash basis, and they are asking us what it would look like for the end of 2007, the end of 2008, 2009, and 2010. So let's start. And under the cash basis, this will be the easiest. As soon as you spend the $21,600, as soon as you spend that, it's all an expense. So on October the 1st, 2007, we have an insurance expense as a debit for $21,600 and a credit to cash for $21,600. So that's what happens as soon as we write the check out. And then we would, under a cash basis system, on the balance sheet at the end of 2007, we would have zero as far as an asset, because we don't have any assets. As soon as we write the check, it's all an expense. So it'd be an expense on the there wouldn't be anything on the balance sheet. And as far as at 2007 on a cash basis, it all would go to expenses. All $21,600 of it. Now, let's see what else we got here. At 2008, we would have again. Since it was not an asset in 2007 and it was all expensed in 2008, we still don't have anything as far as assets for this transaction, and we've got on a cash basis zero for expenses for 2008 because it was all expensed in 2007. For 2009, same thing on the balance sheet. There's not anything listed under assets. And as far as expenses, nothing there because again it was all done in 2007. As far as 2010, it's zero on the balance sheet for assets, and as far as 2010 on a cash basis expenses, it's going to be zero there. So cash basis is pretty easy, although it doesn't properly match expenses with revenues. That's the problem. So we've done it all now for cash basis. Let's see, for accrual basis, as soon as we write the check under accrual basis accounting, that is, you match revenues and expenses in the period in which you benefited from these items. So when we first spend this $21,600 on insurance, it's all going to go in the beginning as an asset. So our entry is going to be a debit to prepaid insurance for $21,600 and a credit to cash for $21,600. So that's what happens on the very first day that we of October that we get this coverage. At the end of 2007, some of this asset, the $21,600, is going to be used up. 3 months of it's going to be used up. So let's do some more calculating here. We had the total policy was for 36 months. We paid $21,600, so $600 a month will be used up, and it looks like at 12/31 we will have an expense of $1,800. That is, October, November, and December will be used up of the $21,600 as of the end of December, and we'll make an adjusting entry to debit insurance expense and to credit prepaid insurance, the asset account. So under accrual basis accounting, our expense for 2007 will be $1,800, and our asset will be the difference between the $21,600 and the $1,800, which will be well, there's 3 times 6, $1,800, and we'll have left as an asset at the end of 2007 $19,800. So we started out with an asset of 21,600. We've used up 3 months of it at $1,800, and now we've got 19,800 at the end of 2007. Let's go on to 2008. 2008, we have for the whole year we have insurance expense that'll be used up. So let's see, $600 a month times 12 months will be $7,200. We'll debit insurance expense, credit prepaid insurance, and that's for a full 12 months. And it looks like the amount that's left will be the original 19,800 that we had at the end of 2007. We're going to use up another $7,200 of that 19,800, and we'll end up at the end of 2008 with $12,800 left in the asset account. So there's our $7,200 that we expensed in 2008, and this 12,600 rather will be how much is left in the asset account at the end of 2008. So you can see how this more properly matches the expenses in the period in which they were benefiting our company. Now 2009. 2009 is another full year, so we've got another $7,200 that we'll expense. So we'll make an adjusting entry at the end of 2009 to debit insurance expense for $7,200, credit prepaid insurance for $7,200, and that's for the full year, $600 a month times 12 months. And then what's left on the asset side of under prepaid insurance account will be the 12,600 minus what we've used up in 2009, which was another $7,200, and so we'll have $5,400 left. And so that's for 2009. Now 2010 is not going to be a full year because we bought this in 2007. It was a 3-year policy, so sometime during 2010 it's going to be used up. So all we have left is this $5,400, and we're going to expense all of it in 2010, take it out of here and put it in here as an expense for the year 2010. So we will actually, it'll run out at September 30th of 2010, because that would make a full 3 years or a full 36 months. So our adjusting entry is going to be a debit insurance expense and a credit prepaid insurance, and that'll be a total expense in 2010 of $5,400. And again, that's 9 months, January through September, at $600 a month, which would be a total of $5,400 that we'll expense. And we have nothing left in the asset account. It's all been used up, so that'll be a 0 there. That's the end of the problem. I hope that's gives you a better way to understand the difference between accrual basis and cash basis accounting.